Visa Inc. is currently trading at $324.20 per share, marking a significant intraday climb of 4.7% as of April 29, 2026. This surge follows the release of the company's fiscal second quarter earnings, which hit the tape late yesterday and sent shockwaves through the financial sector during the early hours of today's session. While the broader market might have expected a steady, defensive performance from a legacy payment giant, the reality is that Visa just posted its strongest revenue growth in over a decade. The disconnect between the boring utility narrative often attached to Visa and the high-octane growth figures just reported is creating a massive curiosity loop for investors. Most people view Visa as a finished product, a giant that simply grows with the population. But the numbers suggest a business that is aggressively capturing new types of money movement through a sophisticated digital stack. This price action is particularly striking when you consider the institutional activity surrounding the stock over the last 24 hours. We are seeing heavy volume on the buy side, likely driven by algorithmic triggers and large-scale fund rebalancing. The common belief was that high interest rates and a cooling consumer would eventually dent the transaction volumes of companies like Visa or even the smaller players on the Robinhood app. However, the data shows that consumer spending is not just holding up, it is evolving. The expectation was for a slight beat on the top line, but the reality was a 17% surge in net revenue, reaching $11.2 billion. This isn't just a recovery story anymore, it's an expansion story, driven by value-added services and a massive jump in data processing fees. Looking at the immediate price movement, the stock gapped up at the open and has maintained its momentum, largely because the company paired its earnings beat with a record-shattering $7.9 billion share repurchase during the quarter. When a company with the scale of Visa decides to buy back its own equity at that speed, it sends a clear message to the market about where they think the valuation is headed. It also puts pressure on short sellers who were betting on a slowdown in cross-border travel. Instead, cross-border volume excluding intra-Europe rose by 11%, proving that global commerce is far more resilient than the headlines suggest. For those who track their individual brokerage accounts or manage their holdings through Schwab Intelligent Portfolios, this kind of volatility in a blue-chip name is a rare opportunity to see how institutional sentiment shifts in real time. The technical setup here is fascinating. We are seeing Visa stock distance itself from its 52-week low of $293.89, and it is now eyeing the upper echelons of its historical range. The trading volume today is already eclipsing the daily average, which indicates that this isn't just a retail-driven pop. Institutional desks at Fidelity and other major houses are likely processing significant inflows. If you look at how the NVIDIA stock or Tesla stock often move on sheer sentiment, Visa usually provides a more grounded, fundamental-based rally. But today, the fundamentals are so strong that they are producing a tech-like breakout. The market had priced in a much more conservative outlook for the fiscal year, but management's decision to authorize a new $20 billion multi-year share repurchase program has completely reset the floor for the stock. Establishing common ground with the average investor, it's easy to see why someone would be hesitant to buy into a rally this steep. The standard logic is that after a 5% jump in a single day, a stock is due for a pullback. But the deeper analysis suggests that we are witnessing a fundamental repricing of the business. Visa is no longer just a plastic card company. It has become a hyperscaler of payments. Their recent focus on agentic AI and stablecoin capabilities within their Visa as a service stack is a move towards capturing the future of programmable finance. This is where the tension between expectation and reality becomes most apparent. The expectation is that Visa is a legacy network vulnerable to disruption. The reality is that they are the ones building the infrastructure that the disruptors have to use. The sheer volume of processed transactions, up 9% this quarter, is a testament to the fact that the underlying economic engine is still humming. This is critical for anyone involved in online investing or looking for investment help through various investing sites. When you see a 36% jump in GAAP earnings per share, you have to ask where that efficiency is coming from. It isn't just higher fees, it's a reduction in litigation provisions and a disciplined approach to operating expenses, which actually declined on a GAAP basis. This kind of operational leverage is why the big players at Fidelity Wealth Management or those utilizing interactive brokers trading platforms are often heavily weighted in these types of compounders. Let's talk about the business model for a second, because it's the foundation for all this movement. Visa doesn't actually lend money. They don't take on credit risk like the banks you might find on the SoFi trading platform. Instead, they act as the toll booth for the global economy. Every time a transaction happens on the network, they take a tiny slice. In the last 3 months, they processed $11.2 billion in net revenue by simply being the invisible architecture of commerce. They've recently integrated acquisitions like Prisma Medios de Pago in Argentina, which shows they are still finding pockets of the world to modernize. This aggressive M&A strategy, combined with their internal innovation, allows them to maintain a near monopoly on high-trust, high-speed transactions.
For the retail crowd on the Robinhood app or people doing self-investing, the appeal of Visa has always been its stability. But when you look at the recent earnings, you see a company that is acting more like a growth stock. Their other revenue segment, which includes value-added services like fraud protection and consulting, surged by 41% to $1.3 billion. This is the hidden part of Visa that the market is finally starting to value correctly. It's not just about the swipe anymore, it's about the intelligence behind the swipe. If you were using a robo-advisor like the SoFi robo-advisor or an intelligent portfolio, these services are likely already factored into the risk-adjusted returns they project for your basket of financial stocks. Comment below how many shares of Visa stock you currently hold, or if you prefer holding a broader basket through something like Fidelity ETFs. It's always interesting to see if people are sticking with the individual names or moving towards diversified funds in this environment. The institutional activity we're seeing today is also a reaction to the macroeconomic backdrop. While the general narrative is one of geonomics and trade fragmentation, Visa's data shows that intra-regional trade is actually booming. As supply chains rewire, the business travel associated with that shift is driving a recovery in cross-border commercial payments. This is a nuance that most casual observers miss. They think a trade war or a shift in manufacturing is bad for a global payment network. But in reality, the friction and the new trade patterns often require more sophisticated payment solutions, which plays right into Visa's hands. This is the kind of insight that separates a basic online investment strategy from one that truly understands the plumbing of global finance. Looking forward, the catalysts are quite clear. The new $20 billion buyback program provides a massive safety net and a constant source of demand for the shares. Furthermore, if the global economy hits the 2.7% GDP growth projected for 2026, Visa's position as a proxy for global consumption means they are almost guaranteed to capture that tailwind. The risk, of course, is a sudden and sharp contraction in consumer confidence or a regulatory crackdown on interchange fees. We've seen legislative pressure before, and it remains the primary bear case for the stock. However, Visa has a long history of navigating these waters and coming out with even more entrenched relationships with banks and merchants. For those using the Fidelity mobile app or managing their own portfolios on the Interactive Brokers platform, the question is always about entry points. Is $324.20 too high? If you believe the reality of 17% revenue growth is sustainable, then today's move might just be the beginning of a new leg up. If you think this is a one-time spike driven by a decrease in litigation costs, you might wait for a cooling-off period. But the reality is that the market is rewarding the company's transition into a high-margin services provider. They are effectively diversifying away from the simple transaction fee and towards a more complex, sticky ecosystem of financial tools. The contrast between the legacy label and the hyperscaler performance is the central theme of today's market action. While many investors are busy chasing the next Apple stock or the latest crypto trend on Robinhood Crypto, the steady, reliable, and now rapidly growing Visa is quietly outperforming expectations. The company is using its massive cash flow to not only reward shareholders with a 67-cent quarterly dividend, but also to invest in the next generation of payment technology. This balance of capital return and reinvestment is why it remains a staple in Fidelity IRAs and other long-term retirement accounts. To summarize the situation, Visa's current price reflects a market that has been forced to reevaluate its growth assumptions. The expectations were for a modest, defensive quarter. The reality was a high-growth blowout backed by a massive buyback program. We've seen strong institutional buying, a breakout in cross-border volumes, and a clear path forward through the modernization of global trade patterns. Whether you are looking for investment help for your first individual brokerage account, or you are a seasoned pro on the Interactive Brokers trading platform, the lesson here is clear. Never underestimate an incumbent with a massive moat when they start to innovate like a startup. The authority Visa commands in the payment space is currently being reinforced by these numbers. The gap between what investors thought the company was capable of and what it actually delivered today is what is driving this 4.7% climb. As we move through the rest of the 2026 trading year, the focus will remain on whether they can maintain the 17% revenue pace. If they do, the current valuation might soon look like a bargain. The stock has proven that it can thrive even in a fragmented global economy, turning trade challenges into payment opportunities. That is the lasting insight from today's session. Visa is not just riding the wave of global commerce, it is the board that commerce is standing on. The reality of its growth has firmly exceeded the market's expectations, and the price is finally starting to reflect that deeper truth. Maintaining this level of dominance requires constant evolution, and for now, the market is convinced that Visa is doing exactly that. As you look at your own holdings today, whether they are in SoFi active investing accounts or traditional mutual funds, keep a close eye on these high-volume moves. They often tell the story of where the smart capital is heading before the rest of the world catches on. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.